Welcome to this explainer. Today, we are cracking wide open the secret history of money. We're going to completely bypass the myths you've probably been spoon-fed to see how the financial cheat codes of the world actually work. We're talking about how the first banks were supposedly created by criminals, how historic fortunes were forged in the fires of war, how the global currency system was entirely rewritten over a single secret weekend, and exactly how today's ultra-wealthy use completely legal loopholes to just multiply their net worth overnight. Okay, let's dive right into this.
So, let's start with a really provocative question. What on earth do 17th century goldsmiths, Napoleon Bonaparte, and modern billionaires actually have in common? I know, it sounds like the setup to a bizarre joke, right? But the punchline connects to the very real, and often completely hidden, mechanics of our modern financial system. As you'll see, these wildly distinct eras connect to a single, continuous evolution of wealth.
And honestly, there is no better way to set the stage than with this famous maxim: give me control of a nation's money supply, and I care not who makes its laws. Now, this quote is widely associated with the Rothschild dynasty. And, whether or not it was spoken exactly this way, it absolutely nails the economic reality of the past 2 centuries. It's all about understanding who really holds the levers of global power.
Okay, Section 1, the fractional reserve myth.
So, there is this wildly popular story floating around, maybe you've even heard it, that the very first banks were actually created by outright criminals. The myth claims that 17th century London goldsmiths secretly embezzled the gold their clients deposited and just lent it out behind their backs. But according to the research of economic historian George Selgin, contemporary English law and historical records prove this is completely false. These goldsmiths were legally innocent bailers who innovated the banking system entirely above board. So the origin of banking isn't some dark story of secret theft. It's a story of legal, structural innovation.
Moving on to Section 2, the Rothschild bond empire. You have probably heard the so-called Satan myth. It claims that Nathan Rothschild used early news of Napoleon's defeat at Waterloo to deliberately crash the London stock market, creating this insane panic so he could scoop up assets for pennies. It makes for a great movie plot, but it's entirely fabricated. In reality, Nathan was holding a massive position in physical gold to fund the British Army. When he got the early intelligence of peace, he knew gold would just plummet. So, in a truly brilliant pivot, he liquidated his gold, went entirely long on depressed British government bonds, and held them for 2 years. He earned a massive 40% profit by 1817. He didn't crash the market. He just recognized a macroeconomic shift way before anyone else did.
And this brilliantly illustrates their actual genius. It wasn't cartoonish villainy. The Rothschilds built a decentralized network that practically acted as a supranational central bank. They utilized a high-speed private intelligence network that moved literally faster than governments. By 1818, with the Prussian loan, they invented the international bond market from scratch, issuing debt that could be collected in multiple European cities. They essentially hedged their portfolios against geopolitical volatility across the entire continent.
All right, Section 3, the end of gold.
We hit what is known as the Nixon shock. Just look at this rapid cascade of events in the summer of 1971. Under the Bretton Woods system, the US dollar was tied to gold, but by '71, the US literally didn't have enough gold to cover all the dollars held overseas. In May, West Germany bailed on the system. By August, France actually sent a battleship to New York to retrieve their gold. Wait, what? A battleship? And Britain demanded $3 billion in gold from Fort Knox. That is a literal run on the US Treasury. So, over a secret weekend meeting at Camp David, President Richard Nixon made a monumental choice. On August 15, 1971, he simply suspended the dollar's convertibility to gold.
So, the absolutely crucial point here is this. With that one single speech, the US dollar was transformed into a fiat currency. It became money that relies entirely on government maintenance rather than a physical commodity. Technically speaking, it became unbacked by any physical asset whatsoever, ushering in our modern era of floating exchange rates.
Section 4, the petrodollar machine. So if the dollar wasn't backed by gold anymore, how did it maintain its global dominance? Well, the United States had to pivot quickly to create a brand new foundation. In the summer of 1974, Henry Kissinger and King Faisal struck this covert arrangement in Riyadh. The United States provided a military security guarantee for the Gulf and access to U.S. financial markets. In exchange, Saudi Arabia agreed to price all of its global oil exports exclusively in U.S. dollars, and they agreed to recycle their surplus profits straight back into U.S. treasuries.
This created an absolutely ingenious system known as petrodollar recycling. Just think about it for a second. If Japan wants to buy oil from Saudi Arabia, Japan has to buy US dollars first.
This forces literally every oil-importing nation on Earth to hold U.S. dollars. The dollars flow to the Gulf to pay for oil, and then straight back into U.S. Treasury bonds to finance American government debt. It's practically a perpetual motion machine for financing American power. And the scale of this thing is staggering. Because every nation is forced to buy dollars just to keep their lights on, academic economists estimate that this structural premium has provided the U.S. with a massive $15 trillion subsidy over the last 50 years. That is $15 trillion of value captured simply by designing the rules of the game.
Section 5. Modern wealth loopholes.
We've seen how nations structure the rules, but how do the ultra-wealthy navigate this established architecture today? You might think billionaires become wealthy through secret, illegal loopholes, but the truth is way more structural. Coined by law professor Ed McCaffrey in the 1990s, the buy, borrow, die strategy shows exactly how it's done. Step 1. Buy appreciating assets like stocks or real estate. Step 2. Because debt is not taxed, you borrow against those assets to fund your lifestyle, taking the cash entirely tax-free. Step 3. When you pass away, your heirs inherit the assets with a step-up in cost basis, legally wiping out the capital gains taxes. Boom! It's not tax evasion, it is just perfectly playing by the rules of asset appreciation and debt.
Another perfectly legal wealth-building tool is carried interest. If you manage a massive real estate or private equity fund, your performance-based profit share isn't taxed as standard compensation, which could be up to 37%. Instead, it's taxed as a return on investment risk, locking in a much lower long-term capital gains rate of around 20%. Politicians complain and often call it a loophole, but it's a fundamental part of partnership economics designed to reward actual execution.
But mastering these tools requires the right perspective. As the thinker Nassim Nicholas Taleb points out, successfully utilizing these strategies over the long term requires having skin in the game. A manager with their own money on the line worries about total collapse and builds a robust long-term strategy. But a manager without skin in the game, they just print good short-term numbers to collect a fat bonus, knowing full well they won't pay the price when the market eventually turns.
So what is the true nature of wealth? From the Rothschilds' private courier networks moving information faster than entire governments, to the petrodollar's invisible global tax, to the buy, borrow, die strategy, the real secret history of money is simply about mastering these perfectly legal, systemic efficiencies. It's about structural leverage and always retaining optionality. But I want to leave you with this final, highly provocative thought. Everything we just looked at, it's currently shifting. Right now, in 2026, the UAE is issuing ultimatums to trade oil in the Chinese yuan. The 50-year petrodollar architecture is showing some really serious cracks. If the US dollar loses that mandatory energy demand floor, the foundation of modern wealth could completely transform. We might just be witnessing the end of the very financial cheat codes we just decoded. Thanks for joining me on this explainer. Keep your eyes on the data, and I'll see you next time.